Hey everyone, welcome back to the channel. Uh, Set for Life Crypto Kurt. Your boy Crypto General couldn't make it. He might come on if he gets a chance, but I'm going to be breaking down some information for you tonight. We're going to be diving into something super real: how to manage your money on a low income and still invest in crypto, specifically XRP. Now, I want to be clear, this isn't financial advice. This is education and strategy that can help anyone making $2,000 to $3,000 a month. If that's you, stay locked in because I'm going to show you step by step how you can pay your bills, save for emergencies, and still grow your crypto portfolio. On the screen, I'm showing crypto bubbles. As you can see, most everything on here today is in the green. We got XRP up 2% today, currently trading around $2.8486. I'm gonna go into a couple of things here. People on a low budget, I hear it all the time. Well, I don't have money to invest. I'm too busy trying to pay all my other bills. Living on 2 to 3 grand a month is tough. I mean, rent's high, food's expensive, and by the time bills are paid, it feels like there's absolutely nothing left. I get it. A lot of people think investing is only for the rich, but that's not true. Even small amounts matter. Think about it. $20 a week doesn't sound like much, but that's over $1,000 a year. Consistency is more powerful than waiting for a big paycheck that may never come. I know a lot of you might know who Warren Buffett is. I'm gonna go over here. I'm gonna play something this evening that Warren Buffett said that'll kind of bring this to light.
I'm going to tell you something that might disappoint a few of you. There is no secret. There's no magic formula. I can whisper through this screen that will make $1 million appear in your bank account tomorrow. But here is the good news, and it's the most important thing you will hear today. There is a path. It is a simple path. It is a reliable path. And the single biggest obstacle on that path is not your paycheck, it's not your age, and it's not the stock market. The biggest obstacle is the belief that this game is too complicated for you to play. The financial industry has a vested interest in making you feel that way. They want you to think you need a guide, a guru, a constant stream of advice for which they can charge a handsome fee. They are wrong. For the next few minutes, I'm going to lay out a five-step plan. This isn't theory from a textbook. This is the bedrock foundation of how wealth is actually built. And we're going to start in a place you might not expect. We're not going to start with stocks or bonds. We're going to start with the single greatest asset you will ever have, an asset that you control completely right now, no matter your situation. And mastering this first step is the prerequisite for everything that follows. So let's begin. Step one, before you can make your first million, you must make your first investment. And the most important investment you can possibly make is in yourself. Now, that might sound like a platitude from a graduation speech, but I mean it in the most practical dollars and cents way possible. The greatest financial asset you have is your own earning power. Think about it. $1 million portfolio that earns 7% a year will generate $70,000. A person who develops their skills to the point where they can command a salary that's $70,000 higher than it was before has created the equivalent of $1 million asset from scratch, and they did it without taking any market risk. This is the solution for the person who says, I'm broke. You may not have capital, but you have capacity. You have time and a mind. Your goal.
All right, so we're gonna go ahead and stop that there. So as Warren Buffett says, the most important thing is to invest in yourself, and you are in control of the most important asset, and that's your capacity to earn. But what you do with those earnings is just as important as the earning itself. Um, so even if you only made between $2,000 and $3,000 a month, and let's just say roughly $2,500 a month. And these are just rough numbers. Your numbers are different, I'm sure. So play with your numbers how you can. But we're gonna say between 50 to 70% of your income will go to necessities, things like rent, transportation, food, utilities, things like that. Then we're gonna put 20% is gonna go into your debt and savings backup, right? So 20% of that monthly income, we're going to go to pay off debt, credit cards, whatever debt you may have. And also some will go into a emergency fund for saving. Then another 10% is going to go into investing. And then you have another 10% that we're going to call fun money. That's going to be stuff for you to still have fun, go do things, stuff like that. You can still buy your Starbucks coffee in the morning. That way you're not just surviving, you're planning ahead. You're thinking about stability first, investing second. And before you go real heavy into investing, you need an emergency fund. Why? Because life happens. I mean, your car might break down, you might get sick, rent comes up short. You don't want to like panic sell your assets, your crypto at a loss when the market's down just to cover your bills, right? So you want that emergency fund sitting to the side just so when life does happen, you still have a way to take care of those emergencies without tapping into your investments that you're making, right? Your goal is going to be between $500 to $1,000 in that emergency fund. If you save $250 a month, you'll hit that in just 4 months. So you want to keep that emergency fund in a high yield savings account, not in crypto, not in investments. That's going to be your savings in an emergency. That's your emergency put away money. Now we're going to talk about investing in XRP with what's left over. The strategy I recommend is called dollar cost averaging. Of course, we talked about that in a video earlier this last week. You can go back and check that video out. It was from a few days ago. Instead of trying to time the market, you basically buy a fixed amount every week, no matter what the price is. So your target price on $2,500 a month income would be $62 a week. That's $250 a month. And by the end of the year, that's almost $3,000 invested. So it's not a lot. That way you're not stressing about whether the price of XRP is up or down. It doesn't matter. When the price is up, that $62 buys less XRP, but when the price is down, that same $62 buys more XRP, and it averages out. I'm going to lay it out step by step, right? So you got months 1 through 4, and we're going on a 12-month plan here, right? So 1 year to be financially stable and have money in investments. $250 a month is going to go into your emergency fund. $250 a month is going to go into XRP. That's months 1 through 4. At the end of month 4, you're going to have $1,000 saved and $1,000 invested. You're going to start to feel a little bit comfortable with yourself at this point. Months 5 through 12, your emergency fund is done. Now you can put that extra $250 a month that you were putting into your emergency fund into XRP, as well as the initial $250 a month that you were putting into XRP. And at the end of month 12, that's about $3,000 invested and $1,000 in your emergency fund. That means you have $4,000 saved and invested in 1 year, even with low income. So this is going to be the plan for people that says, I don't know how to do this. I don't think I have enough money to invest in the market. You don't need a lot of money. Again, little pieces, little bits add up over time. And it's really about the long term here. It's not about short term gains. It's not about get rich quick. It's not about being rich next year, tomorrow, things like that. It's about simply buying into a business that you believe in when the price is low, when you can, every week, putting a little bit in there, and over the course of the next 10 to 20 years, that compounding money that's continuing to make more and more and more money will put you into a situation where you can start to do other things besides struggle. You'll be able to invest into other things. You'll be able to pull some money out, maybe start a business. We're going to be going over into some deeper financial planning, myself and Crypto General, this next week over wealth management, starting trusts, family business, mitigating taxes, doing a lot of things with that wealth once that wealth has been created. This is just simply a quick video tonight, a quick live tonight, just to kind of put you guys on a path of thinking delayed gratification. What I do today is going to pay me tomorrow, right? So what I do today, what I put in this week is going to pay me 5 years from now. Start thinking like that, and then start small and just keep being consistent every week and putting in that small amount every 2 weeks or whatever, every month, whenever you get paid, putting that into your accounts. Right? Get you a little buffer on the side so you have your emergency fund. Get your investments going so you have that building up. Start paying down that debt, your credit card debts, other debts. Start with the highest interest debts first. It's going to cause like an avalanche effect. So you want to pay off your highest interest credit cards first and then work your way down the list. Once you're done with all of that, you're going to find yourself in a whole lot better financial situation. You'll find yourself with money in your savings, a buffer, investment money that's growing year over year, and you'll feel a lot more comfortable about your future. Let's go take a look at Flare's up today a little bit. It's doing well. Let's see. And XRP we had broke down below this wedge here, which could cause a little worry. Be looking down at the 261, but we've broke back up and we've closed above this wedge here, so we're back trading in this wedge. So it looks like we're going to continue to go along this path and before our breakout up to the upside. Hopefully here in October, with all of the ETFs and spot ETFs and everything that's going on with XRP, we'll see this nice little breakout towards the end of October. Looking real forward to it. As always, guys, like I said, this was going to be a quick live. I just wanted to go over a breakdown of how you can invest some money. We're going to skip forward this. So we're going to go. Here we go. Let's see. Here we go.
About mastering your own mind. Step 3 is to hire a very wise business partner and fire a very foolish one. The good news is they both live inside your head. The wise partner is your rational mind. And it's the part of you that can look at a set of facts, analyze them calmly, and make a decision based on long-term value. The foolish partner is your emotional mind. It's the part of you that gets swept up in euphoria when everyone is making money and gets paralyzed by terror when everyone is losing it. The entire game of long-term investing comes down to making sure the wise partner is always in charge of the decisions. You see, the stock market is a device for transferring money from the active to the patient. It's a manic depressive business partner. I call him Mr. Market. Some days he shows up at your door euphoric. offering to buy your shares in wonderful businesses for far more than they are worth. On those days, you are welcome to sell to him. Other days, he shows up despondent, convinced the world is ending, and he offers to sell you his shares for a fraction of their true value. On those days, you should be happy to buy from him. The mistake most people make is that they let Mr. Market's mood dictate their own. When he is euphoric, they become euphoric. They buy at the peak of greed. When he is despondent, they become terrified. They sell at the bottom of fear. This is the surest path to ruin. Your job is to cultivate the temperament of a business owner, not a stock trader. You must view the market's volatility not as a threat, but as an opportunity. This is the solution for the person who feels lost in the chaos of market swings. Your philosophy is your anchor. Your rational mind, your wise business partner is your captain. How do you do this? First, you stop looking at the market every day. Checking your portfolio constantly is like checking on a sapling every 5 minutes to see if it's grown into an oak tree. It doesn't help, and it just creates anxiety. Second, you must have a predefined philosophy of what you are doing. You are not buying ticker symbols. You are buying fractional ownership stakes in productive American and global businesses. You are a long-term partner in their growth. The daily gyrations of their stock price are mostly noise. You are interested in the music of their long-term earnings. This mindset is crucial. You have to cultivate it before you invest your first dollar.
So there you go. You need to know what you're investing in, and be confident in those businesses. Again, you're not just buying $1 on the screen. You're not just like, oh, this is 25 cents. I think it might go up to $1. It could, so I'm going to buy into it. That's just speculation. Warren Buffett doesn't speculate things. He knows what the value of a company is. He knows the people that are behind the company, what the company does, the products they bring to market, their competition, what's their competitive edge against their competitors. All of this information matters when you're investing into a company. So he finds those companies. He knows, he's confident in the companies that he invests in, and he finds them whenever they're at a position in the market, when their stocks are at a reasonable price compared to what the actual value of that company is. So that's basically how you read the market. You buy into it, you buy your shares of that company, and you just simply hold them. And I'm not talking hold them for 5 days or 5 months. We're talking hold them for 5, 10, 15 years, 20 years longer, right? Sometimes you don't even have to sell your assets. You can put them into a trust. You can borrow against those assets tax-free. You might have to pay a little bit interest, but oh well, who cares? It doesn't matter. You pay that back. You build more cash flow, invest it into more assets, pay it back, keep all your original assets, and just continue to grow your portfolio. With that said, guys, I want to say y'all have a wonderful Sunday evening. I know a lot of y'all are watching games and stuff like that tonight. I really appreciate you for tuning in and watching this video. Maybe hopefully you got some really good information out of it, and it can get you started on the path to investing a little bit more money. Y'all have a wonderful, wonderful night. Again, this is Crypto Kurt, Set for Life Crypto, and y'all have a wonderful evening.